We'll have a very special guest in moments from now in our studio. In fact, he's with us to talk about his sense of what's happening to the Indian markets and what could happen more from a global perspective. And what we'll try and also do is ask Arvind Sanger about the comments that have come in yesterday and what kind of an impact does that have. But he's managing partner, Geosphere Capital, in our studios. Arvind, great having you. Thanks for taking the time out and being with us. Just from somebody who's perched at the other end of the world, and when you look at this India optimism, pre-budget, post-budget, are you circumspect about what could happen to markets, or are you constructive?
Well, we've been constructive, but I would say that valuations make it a little bit challenging to be constructive in the short term. So there's a long-term view, which is very bullish, and there's a short-term, a little bit, kind of indigestion, if you will, in terms of where some of the valuations have moved to. We're still finding opportunities, but it's, we're looking for where maybe earnings are disappointing and stocks are underperforming, and trying to see if some of those are cyclically attractive. But in general, I'm very constructive. I mean, I think, China is self-imploding. That's another, it's not a direct positive, but that is an indirect positive for Indian markets. You have, global cues suggesting that the one, is that if the Fed is going to be tighter for longer, that's a bit of a, challenge for global investors in terms of risk on, risk off. So those are some of the global, issues at play. But I think in general, the India story seems to be well in way. And, you alluded to the, election announcement. I think that's seen as a relatively non-risk factor. In a world where there's a lot of uncertainty about the US election, other elections, I think India is seen as a relatively low risk on the election front.
Okay, well, let's try and focus a bit on that, Arvind, and what it could do. Now, before we get in Arvind Sanger's comments, it's important to analyze what happened in PM Modi's messaging yesterday. Tamanna is standing by for a quick update there. Tamanna, what stood out?
So, Prime Minister Modi spoke in Parliament yesterday. It was a reply to the President's address, as is convention. But the tone and tenor of that speech, nearly an hour and a half long, is very crucial because it sets the stage clearly for an election which is going to commence at about 100 to 125 days. Now, the market, in a sense, has already discounted a third term for the NDA led by Prime Minister Modi. But to what extent is what was laid out for the first time in Parliament, with the Prime Minister, in a sense, setting a target for his party and for his alliance, the NDA. So the top takeaways, number one, definitely, he's talking about 370 seats. He's saying this on the floor of the House, that the BJP alone will get 370 seats and 400 plus for the NDA in 2024. That's a significant markup from 2019 and 2014, and I'll break that down as well. He goes on to say that India will be the third largest economy in our third term, and he signs it off as Modi ki guarantee. Now, it is, of course, a political statement before an election, but it has to be seen in light of what this government has done in the last 10 years, and which is why it becomes important. Number three, he says the third term will lay the foundation of Viksit Bharat. That's a developed nation status for India. The target for that is 2047. But what do you mean when you say you're going to lay the foundation? And what does that entail in terms of works done, capex, etc., over the next 5 years? It becomes important. The fourth one is, and he says this, that our third term will have very big decisions, which brings me to the next part. What will happen in term 3, which has not already happened in term 1 and 2? That's the cue that investors are going to look for, and of course voters are going to look for. So here's the take after listening to that speech. The sense I got is that the political agenda for the BJP is pretty much done in the first two terms, and the focus will now shift on moving India to a developed nation agenda. So the Ram Mandir ticked off, abolishing Article 370 ticked off. Maybe the only thing left would be a UCC, a Universal Civil Code. But pretty much they have finished everything on their list of the political agenda which the BJP has had for the last several decades. That leaves room to focus purely on the developmental agenda in term 3. The focus on Gyan. Now, what do I mean when I say Gyan? Because he talks about these 4 constituencies time and again in that speech. Gyan is for sort of groups of voters. G is for Garib. Y is for Yuva, A is for Annadata, read Kisan, farmers, and N is for Nari. And these are going to be the recipients of a lot of government schemes and a lot of government focus in term 3. That's an important point for a takeaway for investors as well. It's also made very clear that the emphasis on the infra push will continue. If you thought that was flagging after the interim budget, it's now crystal clear that it will be in a renewed gusto in July, and that outlook of this government on how exactly to move the country forward in terms of big capex is not going to flag off. I just want to come for a second, because this was an interesting chart, to the target that the Prime Minister has set. And, you know, we track companies' targets, so look at it this way. In 2014, the BJP had 283 seats, NDA 336. 2019, they've moved to 303 and 353. And the guidance, so to speak, from the Prime Minister in 2024 is 370 for the BJP and 400 plus for the NDA. So he set himself and his party steep upside. We'll have to wait and see if they deliver.
Right. Arvind, hi, it's Samina. Just to quickly take that cue and discuss how India looks currently as compared to our peers. So how much bearing do you think the election outcome will have on the markets or foreign investors, considering there is no decoupling in the world and we've done really what the rest of the world has done in terms of performance? We've taken a cue from the US or Japan or some of our Asian peers. Do you feel like this year might be more about global cues, valuations, liquidity, Red Sea crisis? I mean, there are so many risks that we've not talked about because we're so focused and internally looking right now.
Yeah, I think that's an excellent point. I think at the end of the day, to me, elections are really at some point here going to become a non-event because it's discounted, like you said. So in that sense, you know, whether it's 320 seats or 350, whatever, it's not, from my standpoint, that's unimportant. That's more for the political, you know, discussion that you would have on a separate note. From an investor standpoint, yes, I think the Red Sea crisis, does this create inflationary pressures? I do see oil production growth, which was very strong last year from shale. If that slows down, that is going to create some upward pressure on oil prices. So there are things to keep in mind that are risk factors for India. Nothing ever, no tree ever grows to the sky. All markets go through cycles. This economy has got a lot of tailwinds for the long term, but that doesn't mean the market will go straight up. So we keep an eye on some of those risk factors. Valuations certainly provide an air pocket below it that when the correction for whatever global factors or local factors may come, there could be a sharp correction. So, you know, that's something to keep in mind. We're not at all, you know, blind to those risks.
We will talk about those local factors a little bit more, but just one quick question. And when you talk to foreign investors outside, Jan saw aggressive selling as compared to Asian peers from foreign institutions. I know there's this talk about, I know we've talked about this for the last 6 months, but the noise is only getting louder, where China seems to be far more cheaper and attractive at this stage. And like a tree can't grow to the sky, you can't keep a China down for that long anyway. Do you feel like the China factor could be critical to determine the kind of flows we'll receive over the next few months? Of course, election is important, but this too, before we jump into the local factors.
No, I think that's a good point. That you know, there will be some funds flows into China. People are trying to bottom fish, and so far they've been you know, wrong, and they've been disappointed. But no market falls forever, and so there could be a trade here where China buy China, sell India. But I think, you know, these are short-term things that we can't control, and we don't get too fussed about. We look at India on its own, and India is expensive. And so that creates the thing that why people are looking for value opportunities elsewhere. And that's the biggest short-term risk to India, is that the valuations are at levels that, you know, there could be corrections, and whether that's a China trade or that is some other risk factors, Fed having to keep rates higher longer, inflation re-emerging, oil prices, these are all risk factors. And so again, in a medium to long-term growth story, everything is good, but in the short term, I think investors should be cautious about. We don't know where the surprise will come from, but we know that when valuations get this excessive, there are always factors that come through. Yeah.
Arvind, I loved the word you used, indigestion, when you talked about India valuations, you know, badhazmi, literally, in terms of how much they've run up. But when you say that elections in that sense have become a non-issue, that's because it's already priced in that you have continuity. The question is that what is going to be the policy push of the government in determining pockets of run-up? For example, what we've seen in your entire PSU basket, what you've seen in terms of cleaning up the balance sheet of OMCs, or rail, solar energy, etc. How are you honing in on that pocket of upside in terms of what governance will look like over the next 5 years?
I will admit to being a skeptic on PSUs. If oil prices went up, would oil marketing companies be required to do national service again?
Absolutely, they will.
They will be. So these things, are fad du jour, but fundamentally, we're looking at companies where we feel comfortable with the alignment of minority interests with the majority shareholder. And the reality is, PSUs, there are times that they align, but when they get out of alignment, it's very clear how those things play out. So we're looking for opportunities. Is there a private sector CapEx cycle coming? We've been hearing about it. It's happened a little bit, but it hasn't really taken off. That would be, when you talk about the developed market opportunity, when you talk about what India needs to do, yes, infrastructure, what the government is doing is very important, and it's been very critical. But the next phase, the efficient CapEx, the efficient growth doesn't come from PSUs. The efficient growth in every economy comes from the private sector in terms of return on capital, return of capital, all of those things that the private sector is so good at. And that needs to now, the government, if it's going to do policy initiatives, in addition to doing infrastructure, it's not going to be how we're going to get the PSUs to do better. It's going to be how we're going to encourage the private sector to do more investment. That is going to be the transformative change, not that PSUs will suddenly become, the golden child. The PSUs need to be privatized to whatever extent they can be. It's an abomination that PSUs exist in so many sectors. In India, still, it's not the ideal thing.
This government is not keen on privatizing. They want to clean up and run it better.
Good luck to them.
In fact, they have to buy back.
Can I contest that point, Arvind, on 2 counts? One, for people who are skeptical on PSUs, they have missed arguably the best rally that any sector would have seen in 2023. So India's always been a country wherein PSUs fund some of the issues that the government has and private sector does well. Is this government, by virtue of what it has done over the last 2 terms and what it's promising in the 3rd term, giving a window of opportunity into pockets that have hitherto always been neglected? That's the question. Are investors like you biting into that at all? I mean, you've got to take cognizance of the fact the PSU index has had a 85% rally in 2023.
Absolutely. I take cognizance of that. My question would be, and I haven't looked at the data, is that a sign of a change fundamentally, or is it a sign of a bull market which has run out of cheap stocks?
Okay.
And so, you can always decide which one it is. And maybe I'll be wrong, and maybe the PSUs, maybe Steel Authority of India will stop destroying value, where if it's sold iron ore, you would make more money than selling steel. Maybe that'll change. I remain a skeptic. Okay. But if this government will prove me wrong, I'll be happy to change my mind and buy them again. But right now, I'm happy to pass on that rally because it's not where we find, we are comfortable making that bet.
Okay, just one more follow-up from my end. And because you've looked at oil and gas so closely amongst a lot of other things, sometime around mid-Jan, these stocks appeared dirt cheap, upstream as well. Forget just the OMCs, right? And we've seen a bit of a rally here. What has happened in these oil companies? And there are a couple of private players there, but largely dominated by PSUs. So what's happened here, and has it run its course to your mind, upstream and downstream?
I think, look, refining margins are very good globally. So the downstream companies are benefiting, and refiners have done well globally. And I think so that to that extent, yes, the refining sector is interesting. My point is, I can rent these stocks. But if I'm bullish on oil prices, I know that if oil prices go up a lot, then these stocks will become, the margin, the prices at the pump will not move up as fast. So in a sense, this is a good time to own some of these stocks. On the upstream side, yes, there is value. But when I'm looking at global companies are returning cash to shareholders, are exercising capital discipline, and are finding growth. When was the last time ONGC was able to really grow its oil production or return significant amount of cash to shareholders? So when I look at it on a global basis, Indian oil companies are cheap, but they've always been cheap.
Yeah. To be fair, this government has allowed pump prices to run up to 100 rupees a litre and withstood the heat. So they're not too happy to dole out that ease. But I just want to ask a different question. So you're saying PSUs, the story may be overblown. You're betting on private capex. So where does the next leg come from if the consumption levels don't improve? That's one pocket of concern in the Indian context, rural consumption, etc. Do you think that's where the focus needs to be, and that's where you'll see the next leg up?
Well, I think we should try to examine why the consumption is not up. And I think it really comes back to private sector job creation, right? So what we need is that whole cycle to take off. And if that cycle takes off, the virtuous cycle will take care of the problem. It doesn't come from government doles that will fix that problem. Okay. So I think what we need is that, and then a lot of things follow. So right now we bet on looking for private sector capex, and all of that happens. And if this government is really serious about this long-term vision, then job creation is also important, because this K-shaped recovery is partly indicative of the fact that that has not happened sufficiently.
Arvind, you said this a few months ago, that you can't bet on India with financials in the dark house. The Modi guarantee is will be the third largest economy in his third term. You can't do that without financials performing or participating. If I keep that in context and your comment in mind, are you buying financials? And if yes, which part of the financial space are you betting on? Is it NBFCs? Is it capital market play? Is it private sector lenders, such as HDFC Bank, who look attractive for some people? Is it PSU banks? Where is the action? And what are you picking up at this time?
Well, one of the best calls we made, we missed the PSU rally, but we also missed the underperformance of the big banks. So that was a blessing, and part of the reason was we saw this loan to deposit ratio problem, and I don't think we see any clear signs of that. So have valuations got to levels where all the bad news is in and the stocks are so cheap? Maybe one or two, but we're finding more kind of NBFC type opportunities. We're still underweight financials, but you're right that the financial sector can't. It's kind of it's the bloodstream of the economy, and you cannot have an economic boom without the financials participating. I think that's going to take a little while, but I think sometime in this calendar year, we would see opportunities
So you will buy financials front?
Not today, but yes, we are looking for opportunities where we see.
So once the risk reward is favorable?
Yeah, once the risk reward is favorable, yeah.
Great. Okay. Arvind, so good having you. Thank you so much for being in our studios.
We can't get enough of you, so we keep going with the questions.
We have to let him go, unfortunately. His time is up. But thank you, Arvind, for joining in today. And all the best with whatever is left of the India tour, if you will.
Thank you.
Yep.
Appreciate it.